Well, here we're looking at the Dow. We can see that we're really seeing. Let me just get rid of this here, because okay, we're seeing prices continue to make a little bit of a bounce here. We talked about the fact that we were going to see this kind of move. If it was going to hold, it was going to hold this 17,200. That was our call. That was our target, and that was our first major support level. We hit 17,210, so we were correct within about 10 points, 1043. And then we saw a big move today, about a 237-point move, 237-point move to the upside, almost to this 500. I think we talked about that as being a potential target. I would watch that as significant. I would say maybe this, 1750, 550 to 17,500 would be significant resistance. And let me just draw real quickly here the retracement for this. We are basically looking at a situation where we're seeing a counter move into this range, and we have to watch for the momentum or the momentum loss. So, of course, this 17,600 would be the 50% retracement, but keep in mind, here's your 50-day moving average on the hourly. So I think that may play an initial role. So this 17,500, of course, could try to rally there, and then you see that first dip, and maybe we start to see this kind of keeping that pullback, and then you see the deeper, the more continuation, of a move here. As I said, I think that this could last till Friday, and then start to drift off, and then start to weaken up again. Watch for the higher range targets, maybe at the 17,700, but I think it's going to take a lot to get there just yet. I think keep in mind this has just been a recovery after a pretty good decline. I mean, you have you're basically at 18,000, and now you're at you had an 800-point move. So you got to put things in perspective, and now you saw 300, basically almost a 300-point move. So we're not quite not even halfway where we lost on the action. So traders need to keep that in mind of what you're seeing and why we're doing what we're doing. We knew we'd kind of see this. What could take place too is then the break of that 200, 17,200. If people really got worried about what was going on overseas, then you'd see that continue to go. This is what really perplexed people. Why are we seeing this kind of rally in in the markets? Now, some could say, some which most always say, that it's never technical analysis and it's never mathematics or anything or any kind of anything that could be related. I will certainly, in my opinion, prove them all wrong in my book that will be released very shortly. I think probably in about 3 to 4 months. I'm try to get it on the fast track. It's always another thing I'm trying to point out here, so it kind of goes pretty long, but it's been a very long work. It's taken I think about a 10-year process, really. Anyway, it will, I think, without a doubt, teach people about what really I think is behind a lot of these moves. See, this is what is always very perplexing when people start to look at it and they say, well, why wouldn't the market be afraid of what was going on, and why wouldn't people sell because of what's going on with Syria? Well, some people could say, well, they had the G20 and everybody's all excited because they think that they're going to do something about it. So we're seeing people take them in, and we're seeing the rally, and they found some of who they were, so they were all feeling relieved. Well, maybe that's true, but you can't be reason why everyone buys. It can't be reason. Is that the reason why everybody had that information right at the low? So that doesn't really pan out when you think about it. It can't be. It's not the question, why are they buying in here? Why do they change their mind right in here? And how do you know that in advance? You don't. And news announcements can teach you that or say that to you. Sometimes those news announcements can accelerate things, but for the most part, I don't think they're really the actual initial cause of the change. Just can help fulfill more momentum within the change, kind of self-fulfilling kind of scenario. It's very interesting. But anyway, that's the concept that I'm going to show, and I think when you see the end of it, you'll hopefully be change your mind maybe on how some of that works. Anyway, I would think that you're seeing this counter move, or at least you have to anticipate that that's a possibility. And as it tries to trade back, it could start to weaken up again. A lot of times the bulls will say this is a great time to be buying because you're seeing a good dip here. That could be a possibility. My concern with it is when we look at it on the weekly. Oh, that won't work here. Okay. When we look at it on the daily here, we could see that we really see a lot of prior history right at the ranges. So if it can't really hold those ranges and break those ranges, then we're not going to see a big new move. Now, if we see breaks through these highs, we will see a very strong move if we can get past the 18,000. That is the one big thing here, is if it can kind of hold this and break through the 18,000, we would see a big move, maybe to 19. But it would have to really break through all these highs with really big momentum. But what my concern is that we might not have that left in us, and some people may be getting a little bit spooked about what's going on with the markets. When we look at this, though, we are seeing some improvement on the short term as it's holding the 50-day moving.